Markets are down to start off the week. Some major earnings reports are going to be coming up later on this week. I want to get the read from former investment banker Carol Roth and Nicholas Wealth Management CEO David Nicholas. Great to see you both. Carol, let's go ahead and start with you. Looking at the landscape, the sound bites that we're playing from Larry Summers and Mohamed El-Arian and the guests that I've had on the show today, not really setting the brightest landscape ahead of us.
No, and we've just heard from Jamie Dimon as well, whose company is reporting later in the week. I have to tell you, Jackie, even though it's a big earnings week in theory, I don't think it's going to give us that much information because I don't think these companies can predict the most important part of what's ahead. With the OPEC Plus announcement to cut production, we know that's going to impact inflation. We've seen how that has affected companies in the past, but also it's creating an issue for the Fed because if the Fed continues with their push and they want to continue to raise rates with the elevated prices in oils and with the strong dollar, there could be a global currency crisis. There could be a liquidity crisis in the treasury market. There could be a collapse across risk assets. And I don't think any of these companies have any idea what to forecast in terms of these scenarios. So I just think until we get a handle on what the Fed is going to actually do, that it's risk off regardless of what any of these earnings tell us.
That's a great point. Steve Forbes brought it up in the previous hour as well, talking about the dollar and the trends that we've seen. David, I want to ask you, if oil prices continue to rise, which we think they will, because we were anticipating the EU sanctions, first off, on Russia to go into effect, and that will be happening. And at the same time, we're seeing OPEC Plus, that includes Russia, bring that supply down. The Fed has basically no other choice than to go at this hard.
Yeah, and it's interesting because when we look at earnings, I mean, energy is what is keeping the earnings for the S&P alive in the third quarter. I mean, if you just remove energy company earnings from the overall third quarter earnings story, earnings are negative for Q3, and so it's been disappointing. But I do think energy is a play that we might be able to hide out in a little bit longer. I mean, that's really where we're seeing a lot of the profit, the top line and the bottom line coming from. But the companies that are reporting, it's been disappointing. I mean, many of them are missing estimates. But if we look at fourth quarter, that's where we're already seeing analysts downgrade. We're seeing communication services be downgraded by 9%, financials, consumer discretionary, materials all being downgraded. So I think the fourth quarter is going to be challenging. But look, we've got the holiday surge of shopping coming up. That may save us a little bit. So we may not, like our guest said, we may not really know until first quarter of next year how bad things will possibly be. Speaking
of holiday spending, that is supposed to be a time of year, Carol, that we see consumers going out spending more. But I referenced that Wall Street Journal article about Macy's saying that it was looking at the credit card data. And Macy's actually was very successful because they looked at this data and the spending patterns of consumers spending more on essentials, less on discretionary. And they realized that they had to reshuffle and tighten some of the inventory. And I'm wondering, number one, if other companies didn't miss that necessarily, and we'll hear about it later. And number two, what it will look like for the retailers as we go into the shopping season.
Yeah, I mean, I think it could get pretty ugly. I don't think there was enough anticipation. And not only is there the switch from discretionary to essentials, but on the discretionary front, there has been a wholesale change from goods to services and experiences because everybody really stocked up on all of those goods for a couple years when they were locked down during the pandemic. It didn't have the opportunity to spend on things like travel, where we're seeing a huge bump now. So that could portend a very ugly fourth quarter for us, as well as the consumer, particularly, with the cost of energy going up, is thinking about what's going to happen to my electric bills and my gas bills and those kinds of things. And so I think that the consumer is not feeling super optimistic, and that ends up being a self-fulfilling prophecy.
Not great, not great answers. Not what I think the viewers necessarily want to see, especially for those folks who've been checking their 401ks and are having a rough time absorbing this. And as we speak, we're watching the Dow. It's down 233 points, near its session lows so far today.